Greetings, everyone. My name is Richard Crevo, and from time to time, I'm going to be doing a brief video on various aspects of currency trading. Today's topic is trading with the trend. Now, any of you who are familiar with me or know my background as far as trading goes, I like to trade the trends, trade the strongest trends in the direction of the trend. I also do a strong weak currency analysis each day. Any of you that want to know a little bit more about that, feel free to email me at rcrevofx@gmail.com and put strong week in the subject line. I'll be happy to email you an article regarding that. Anyway, when I did the strong week analysis earlier today, I noticed that the New Zealand dollar was the strongest currency and the Japanese yen was the weakest currency. So I immediately brought up the charts of the New Zealand dollar, Japanese yen. And the charting array that I like to use is a weekly, daily, 4-hour, and 1-hour. Once I brought this chart up, I could see definitely, looking at it, that there's no question that the pair is in a strong uptrend, regardless of any of the charts that you look at here. We see the price building out higher highs and higher lows on all four charts. We see price is above the 200 period moving average, which is this green line on all the charts, and it is pulling away from the 200 period simple moving average. So this, in essence, is showing us that we have a very strong upward trend. Now, as I look at the daily chart, this gives me a little bit of pause here because this move to the upside, let me enlarge this chart a little bit for you. This move to the upside here is almost parabolic. We know that it's going to stop at some point. Nothing goes on forever. But at this point in time, the pair is telling us it's moving to the upside. So we only want to look for buying opportunities on the pair. Now, this 1-hour chart is, let me enlarge that one for you, is an excellent example of what I mentioned about earlier. That is price building out higher highs and higher lows. Here's a high, for example. Here's the next high. It's higher than that one. Here's the next high. It's higher than that one. Here's a low. And this low is, let's use that as our first example. And then here we have the next low. This low is higher than that low. This low is higher than that low, and so forth. So it's building out to the upside, higher highs and higher lows. We also can look for an ABC pattern here forming. And let me bring up some, put some lines here on the chart. Hang on one second. As soon as I find that particular aspect of the chart, we'll be in business. Okay, here we are. Add a line. I'm using market scope charts, by the way. And let's say, for example, just to give you the idea of an ABC, here's our first move. Let's call this, let me make it a little thicker for you there so you can see it. Let's call this our A move, our first move to the upside. Hang on one second here. Okay, so this is our A move. And then our next move would be a B move, which would be a retracement, if you will, move to the downside. And that's our B move. And then we see a C move that moves all the way up and takes out. Oops, didn't want to do that. Sorry about that. Hang on one second here. Okay, and this would be our C move back up in this direction to the upside. So we've got our A move, a B move, and a C move. Now, the key here is we've got our A, our move to the upside, our retracement, move to the downside. As soon as the C move begins, it's a move back in the direction of the trend. Once it takes out the previous high, in this case it was at, on this pair, 91.16 was the price, that would be our entry point right there. So we've got our A, B, C. As soon as C takes out the previous high, that would be our entry because it shows that the buyers are back in control on this pair. Okay, let's get rid of these lines. And we'll just look at another ABC move that's taking place as we speak. And here we have our A. And then here we have our B move. And then here we have the C move, which has not as yet taken out the previous high, which is at 91.59. Now, price right now is at 91.54. And again, this is not an endorsement or me advising you to get into this trade or anything like that. This is strictly a learning opportunity, an educational opportunity for you to learn how I go about looking at the charts. So in this situation, were a trader to take the breakout above the previous high, ideally the stop placement would go right about here at about 91.09. So A, B, C in an uptrend, when you've got your retracement to the B move, the stop would go below the move to the downside, below the B. If you want to be less aggressive in your trade and placing your stop, you could put a stop down in this area here at about 91.60. But essentially, that's the way I look at trading a trend and identifying the strongest trending pairs and how I go about getting into trades. Now, if you have any questions on this video or any trading questions in general, as I mentioned, feel free to email me at rkrivofx, that's RKRIVOFX @gmail.com, and feel free to follow me at Twitter, rkrivofx, the ampersand and rkrivofx. So again, my name is Richard Krivo. Thanks so much for watching, and keep your eye peeled for more of these YouTube videos going forward. Thanks a lot.